Will Bitcoin continue to drop? Where should I take profit on my short position? If you're interested in knowing more about this, please keep watching. Currently, I hold a short position worth $1 million on Bybit. You can see the current paper profit is approximately over $33,000. If converted to NTD, it's roughly around 1.02 million. Adding some funding fees, etc. The total unrealized profit is about 1.05 million. If you think this profit is good, and you also want to trade on Bybit, you're welcome to click the Bybit link below any of my videos. Now, with a KYC verification and a deposit of $100, you will immediately receive $1,000 worth of Bitcoin contract positions. This is truly a very generous offer. Just click the link below to complete KYC and make a $100 deposit. Of course, I've already registered this account before. This event is for new users only. When you claim it, they will set it up for you directly. You can choose either a long or short position. Now, let's get back to the Bitcoin market. Actually, looking at the daily chart. Okay. We have been discussing recently that we should only go short and not long. There's an important reason for that, which is we are in a bearish trend on the daily chart. Although it's not a very strong trend, we are currently in a bearish phase. This is undeniable. Some might say that the market is bullish on the weekly chart, right? Indeed, on the weekly chart, it's a bullish trend. However, the weekly chart is not as sensitive as the daily chart. Also, when you are trading, if you're not trading spots, looking at the weekly chart is unnecessary. If you're trading derivative products like this, I believe that looking at the daily chart is already a longer time frame. If you trade based on the weekly chart, from the perspective of derivative products, it's indeed too large of a time frame. Okay, let's take a look. Let's analyze it based on the weekly chart. Actually, the market is about to switch to a bullish trend soon. Indeed, the market is about to switch to a bullish trend. I believe it will reverse very soon. Just like the segment we had earlier. After the price action reaches below the moving average, it will reverse. And you can also see that in a larger time frame. Although the direction is clearer. If it's a bearish trend, there will be a decline. And if it's a bullish trend, there will be an increase. This is very clear. But it will be slower. What does slower mean? You can see that when the MAs switched to a bearish trend, the price basically reached around 35,000. This is already quite extreme. The peak was around 60,000 to nearly 70,000. In other words, after dropping by half. After being halved, it tells you that the weekly chart has turned bearish. Well, actually, we can also see that in terms of the weekly chart. Even in a bear market, we rarely show a bearish trend on the weekly chart. You can see that if the weekly chart turns bearish, we usually sell at the bottom. Basically, it's at the bottom. And you can also see that when it switched to a bullish trend here, it didn't immediately start rising. In that position, it just continued to oscillate and decline, and so on. So, in my opinion, when looking at the weekly chart, in terms of the Bitcoin cycle, it is indeed a bit too long. Also, from the perspective of trading derivative products, let's look back at the past since mid-2019 and then all the way to 2020. We can see that during this period, the market mostly experienced oscillations, or oscillations followed by declines. Personally, for the current market situation, I hold a very similar view, which is that currently, even if it turns bearish, it's difficult to have that kind of downtrend as we had earlier in the bear market. It's very difficult. Very difficult. Unless there are special events happening. Otherwise, I think it's very, very difficult. As for an uptrend, we will have to wait until the second quarter of next year. Around April or May 2024. That's when we will see a super surge. We still have some time for that. So, what are we waiting for during this period? I believe the biggest opportunity is, if there are such special events occurring, and if there are good prices to buy Bitcoin, I will definitely buy it without holding back. If there is a special event or a significant market drop, I will buy Bitcoin at that position. Because, ultimately, we will enter a bull market. When entering, I will look for a good entry point. However, if no special event or drastic drop occurs, it's still fine. We can buy during the halving period. Okay. Now, let's move on to the daily chart. Based on the daily chart, in my opinion, the current market is still in an oscillation state. I maintain a cautious attitude. Even if it turns bearish, I'll hold a short position. But I don't believe that it will immediately plummet or break below support in the near future. Break through the support and start a sharp drop. If it breaks support and triggers a significant downward move, I'll definitely make a short call. Such trends are rare. We have been in an oscillating market for the past 70 days. And it's a good time to take a rest. Or you can hit and run if you want to trade in an oscillating market. Given the current market conditions, it's still preferable to adopt a mindset of hit and run in oscillation. If you want to do trend trading, if we were to see a bearish trend, it would need to break below the support level of around 26,500. Now, I would consider taking profits on my short position. When the price hits around 26,500, then I'll monitor it. Of course, if it breaks below next, I will add to my position. However, I believe the probability of an immediate break below is relatively low. It's likely to continue oscillating here and accumulate volume and time before a potential breakdown. We discussed this viewpoint before. However, we haven't mentioned how long we need, so that we would have sufficient time and volume for it to break downward. Let's address the question today. We didn't clearly discuss this. As you can see, if we want to determine the duration, we need to consider the amount of time and volume accumulated in the lower region. The market had spent 62 days down here, and although it might seem short, it had accumulated 1.6 million in volume. In the upper region, the price movement lasted 75 days and recorded 1 million in volume. 1 million within 75 days. So, if the upper region wants to reach a similar level as the one below, how long should it take? Let's multiply 75 by 0.6. It's roughly there, right? Based on the volume accumulation rate we had, multiplying 75 by 0.6, it would be approximately 45 days. However, we need to consider a few factors. First, it's already been oscillating for a while. Second, significant events can lead to larger fluctuations. I estimate it will take around 20 to 30 days. If we combine this with the current timeline, we can expect a breakdown by the end of June, at the earliest, or early July at the latest. So, we are looking at the end of June for a sufficient accumulation period. If a breakdown is to occur, it's the end of this month. Currently, it's still the beginning of the month. By the end of the month, or no later than early July, it may experience a downward breakthrough from the current level. However, judging from the current market, an immediate downside breakout is possible, but the probability is relatively low. If you're holding short positions, and you encounter a critical support level, it would be more suitable to consider taking appropriate profits. However, if the prices hit around 26,500 to 26,600, I would take partial profits. If there is a breakthrough, we can re-enter the short position without missing out. The accumulated volume on the upper side can be compared to the pattern we saw in 2019. In 2019, the movement was symmetrical, with a consolidation phase at the bottom, followed by a similar duration and volume on the upper side. It's the same as the lower region. Well, in the previous cycle, we had a 94-day period with a volume of around 1.6 to 1.7 million, which is similar to the current market conditions, right? They are similar. From a volume perspective, they are relatively similar to each other. In terms of measurement, we use Bitcoin as the unit, specifically a trading volume of approximately 1.6 million Bitcoin. This level is not significantly different from the previous standard we used for calculation. It's 1.6 M. In fact, it is quite similar to the volume we just used as a standard for comparison. Even though it broke through the support, you can see that the price didn't drop smoothly. It experienced oscillations and a downward trend rather than a smooth decline or a sharply timed drop. Currently, within this range, the market makers are accumulating chips for the upcoming bull market phase, which will still be dominated by this oscillation pattern. If we are trading contracts, I would lean toward a slightly shorter-term approach. If it were like the previous trend we had, one wave after another, we would need to adopt a long-term perspective, based on the trend and exercise patience during retracements. I used to do that, but now I will slightly adjust my approach. Alright, let's zoom in further to the 4-hour time frame. We've just talked about it. If we examine this area in more detail, around 26,500 to 26,600, this level has been tested multiple times. There have been S/or reversals at this level. Although there is indeed a certain degree of rebound happening now, I consider it to be weak. You can observe this drop, and this drop. All of them had high volumes. Look at this rebound. Okay. Look. The volume during this rebound is quite low. It's lackluster. Therefore, I believe there is no need to fear if you hold short positions. However, if the price returns to this area, it would present a good opportunity to reduce positions at an appropriate time. It would be wise to consider closing some positions and observing the market dynamics before making further decisions. Let's take a look at Ethereum next. Ethereum has been performing much stronger than Bitcoin. The performance is much better. That explains why we focus on shorting Bitcoin instead of Ethereum. Although both are experiencing a decline, the magnitude of the drop is significantly different. When we analyze Ethereum, as you can see, the lower boundary of the oscillation here, well, we can clearly identify the lower boundary of the oscillation from the chart. The strength of this level has been tested. Bitcoin has reached here. But Ethereum, we can still clearly mark the position here. However, there is still a noticeable difference between the current price of Ethereum and the corresponding position of Bitcoin. This indicates that the Ethereum movement is more solid. However, Ethereum ultimately follows the lead of Bitcoin, at least based on the current situation. It's not the other way around, at least for now. Therefore, I believe that Bitcoin still determines the ultimate direction of Ethereum's movement. I reckon the significance and interpretation of the trend lines for Ethereum and Bitcoin in technical analysis are likely to be similar. However, given Ethereum's relative strength, we choose to short Bitcoin, judging from the current condition. Looking at the Ethereum to Bitcoin ETH/BTC chart, we can gain some insights. ETH/BTC has been slowly but steadily rising recently, indicating ETH's stronger performance. We need to be cautious, especially if the trend line is broken here. If it happens, I believe that Ethereum will exhibit even greater strength in the coming period than Bitcoin. Alright, thank you. You're welcome. To like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.